So welcome candidates to the lesson. The topic is regulatory environment. There are 4 subtopics here. International regulatory frameworks for audit and assurance services. Number 2, you have money laundering. Subtopic 3, laws and regulations. Then number 4, other regulators with interest in audit space in Kenya. 4 subtopics. International regulatory frameworks for audit and assurance services. Number 2, money laundering. Number 3, laws and regulations. Number 4, other regulators with interest in the audit space in Kenya. Now, candidates, this topic is related to the topic we covered earlier, audit framework and regulation. That is topic number 2. If this syllabus was to be revised, then the topic they are calling regulatory environment is not necessary, because it is some of the subtopics we've already covered in topic number 2. So I want to assume that was an error in having to repeat the subtopics here. So we are not going to get into 9.1. We covered it extensively in topic 2. 9.3, we also covered regulations. Under topic 2, which is audit frameworks and regulations, we did discuss the general principles of auditing. Then 2.2, we covered the legal framework. Those are regulations. We went further to discuss the international regulatory framework for audit and assurance services, which is appearing as a subtopic number 1 in topic number 9. So maybe what we can look at in this topic is money laundering, which again, if the syllabus was to be revised, it can still be discussed under topic number 2, regulations. Then we may, in this lesson, cover the other regulators with interest in the audit space, such as the Central Bank of Kenya, Insurance Regulatory Authority, Capital Markets Authority, and Retirement Benefit Authority and their requirements. So let's then move to money laundering. Money laundering. Money laundering. To launder. To launder, to clean, means to clean. Laundry. Laundering is derived from the word laundry, where we clean clothes, candidates. Laundering, to launder is to clean. But here we are talking about money laundering, which is a financial crime that involves disguising the profits of illegal activities to make them appear legitimate. So money laundering is a complex financial crime that involves disguising, that involves hiding the proceeds of illegal activities. And the purpose for disguising such proceeds is to make them appear legitimate. And we know examples of such illegitimate activities, illegal activities. Okay, terrorism. Or think of any illegal activity. So, to fight this financial crime, to combat this money laundering, regulatory bodies around the world have implemented stringent laws and regulations. And these regulations are designed to prevent and detect money laundering activities. They are also designed to protect the financial systems and maintain the integrity of markets. And the candidates, one major group of individuals that have key responsibility in prevention and detection of money laundering are accountants. Accountants play a crucial role in preventing and detecting money laundering activities. And their professional obligations and expertise make accountants essential in safeguarding the financial systems. That's why we have this subtopic in the advanced auditing assurance course, because auditors and accountants in general play a critical role, a crucial role in preventing and also detecting money laundering activities. So what are some of the responsibilities of accountants in respect to money laundering? And I think there was a question I saw in your paper related to what I'm just asking. What are the responsibilities of accountants in anti-money laundering efforts? Don't know if I can trace the question. Let me try and see if I can. Yeah, this was tested April 2024. Can I read it? The anti-money laundering responsibility of accountants has become more significant in recent years. This is due to increased organized crime activities, making it necessary for governments around the world to initiate and implement actions aimed at preventing money laundering activities. Required, using illustrations, describe 4 money laundering offenses, including those which could be committed by an accountant. That is a question that was tested in April 2024. Then there was a question, is it in December 2021? Which reads, money laundering continues to gain currency in spite of efforts by countries and international financial institutions to combat it. Required, summarize some of the measures undertaken by various countries and international financial institutions to control and prevent money laundering. Now, but before we get into that, let's first of all understand the accountant's responsibilities. These are anti-money laundering responsibilities of accountants. Anti-money laundering activities, anti-money laundering responsibilities of accountants. Now, firstly, and it is the professional obligations and expertise of accountants make them, as I said earlier, essential in safeguarding the integrity of the financial systems. And one of the anti-money laundering responsibilities of accountants is, first of all, understanding the regulatory framework. As an accountant, you have to have a thorough understanding of the regulatory framework, the laws, the rules. Regulatory framework refers to understanding the regulatory framework refers to just understanding the laws and regulations. Having knowledge of laws and regulations. Knowledge of laws and regulations. These are money laundering laws and money laundering regulations. Accountants must be familiar with the relevant anti-money laundering laws and regulations in their jurisdictions. Then, as an accountant, you have a responsibility to stay updated, stay in tune. Apart from having knowledge of laws and regulations, as an accountant, you have a responsibility to continuously update your knowledge to keep pace with the changes in the regulatory landscape. So that's responsibility number one. Understanding the regulatory framework. Number two, there's what we call client due diligence. Client due diligence. Client due diligence. As an accountant, you must know your client, KYC. Know your client. Know your client. Okay? And you have what we call know your client procedures. In knowing your client, there are certain procedures that as an accountant you have to follow. Accountants must comply or must, let me use the word implement. Accountants must implement the know your client procedures. Accountants have responsibility to implement know your client procedures to verify the identity and background of their clients. Accountants must know the background of their clients. And to know the background of your clients, we have know your client procedures that as an accountant you have a responsibility to implement. Know your customer procedures. Know your customer procedures, KYC. Know your customer procedures. Implement. Know your customer procedures, so that you will be able to identify and verify your client's background. Then, related to client due diligence, there is the aspect of enhancing due diligence. You have a responsibility to enhance due diligence. As an accountant, you have a responsibility to enhance due diligence, especially for the high-risk clients. For the high-risk clients, accountants may need to conduct enhanced due diligence, including obtaining additional information and even monitoring transactions. If you discover, if it comes to your knowledge as an accountant, that client A is a high-risk client in terms of money laundering, if you're suspecting client A is engaged in money laundering activities, then you have a responsibility as an accountant to conduct enhanced due diligence procedures on that client, including obtaining additional information about the client and also monitoring the transactions of that client. Do you understand? Yeah, we're discussing, candidates, the accountant's responsibilities in relation to anti-money laundering. What responsibilities do you have as an accountant in helping the country or the world in fighting or combating money laundering? Number one, it said, responsibility number one, understand the regulatory framework. Number two, there is a responsibility in relation to client due diligence. Number three, we have transaction monitoring. Three, transaction. Accountants have a duty to monitor transactions, particularly the suspicious transactions. What we call suspicious activity reporting. Suspicious activity reporting. Accountants should be vigilant for suspicious transactions and also report any unusual or suspicious activities to the regulatory or relevant authorities. Suspicious activity reporting. That's one thing under transaction monitoring. Suspicious activity reporting. That is your responsibility. Report any suspicious activities to the relevant authorities. Transaction analysis. That's also part of transaction monitoring. As an accountant, you should analyze client transactions to identify potential red flags that may indicate money laundering activities. Transaction analysis. That's the third responsibility. Then we have record keeping. Number four. Record keeping. Record keeping. You have a responsibility to keep accurate records accurate records. Accountants must maintain accurate and complete records of client transactions and activities. Retention of records. The second aspect of record keeping is retention of records. The records should be retained for the required period to facilitate investigations and also to facilitate audits. So if you are an accountant of a company A, or you're an accountant in a bank or any other institution, you have a responsibility in ensuring that the records that you keep for clients are accurate and also complete. The records should also be retained for the required period of time for the purposes of investigations and audits. So that if at some point it is discovered that there is a client you've been dealing with who's been involved in money laundering for the last, say, 3 years, the investigative authority should be able to get accurate records regarding the client, complete records, and so on. Record keeping. 5, you have a responsibility to maintain effective internal controls. Internal controls, effective controls. The controls should be effective. That's a responsibility for accountants. Accountants should help implement and maintain effective internal controls to prevent and detect money laundering within their organizations. Risk assessment is another responsibility. Assessment of risk. Accountants should conduct risk assessments to identify any potential vulnerabilities and also to take appropriate measures to mitigate such risks. You understand? You also have a responsibility in relation to your conduct. Professional conduct. Professional conduct. You have a responsibility to maintain ethical standards. Maintaining of ethical standards. Accountants must adhere to high ethical standards and avoid engaging in activities that could facilitate money laundering. Independence is also related to professional standards. You should maintain your independence and avoid conflicts of interest that could compromise your ability to identify and also to report suspicious activities related to money laundering. 7, you have a responsibility in relation to continuing professional development. Continuing professional development. You have to stay updated. That's a responsibility. You are even repeating. Stay updated. As an accountant, you should participate in continuing professional development activities to enhance your knowledge and skills in anti-money laundering activities. Training is a responsibility. You have to attend training programs, you have to attend workshops to stay informed about the latest trends and best practices in your field, particularly money laundering field. So these are 7 responsibilities of accountants in relation to money laundering. 1, understanding of the regulatory framework. Number 2, client due diligence. Number 3, transaction monitoring transactions. Number 4, you have to keep accurate and to retain records. Number 4, you have to ensure that there are effective internal controls that could be able to prevent and detect any activities of money laundering. Number 6, you have to maintain high ethical standards. Number 7 is being committed to continuous professional development, training, attending seminars, attending workshops. That's your responsibility as an accountant to ensure that you stay informed about the latest trends and also any best practices in money laundering. Now, having that knowledge, candidates, I think we can now answer that question. There's a question I read that was tested in April 2024. Are they offenses? It's a question on offenses. Yeah, the one I read, is it? Using illustrations, describe 4 money laundering offenses, including those which could be committed by an accountant. Money laundering offenses. That is April 2024, question 5. Let me take it again. The anti-money laundering responsibility of accountants has become more significant in recent years. And candidates, we've just discussed the responsibilities. The statement reads, the anti-money laundering responsibilities of accountants. Yeah, that's a question. That question was tested in April 2024. It reads, the anti-money laundering responsibility of accountants has become more significant in recent years. This is due to increased organized crime activities, making it necessary for governments around the world to initiate and implement actions aimed at preventing money laundering activities. Required, explain the term money laundering. Roman 2, using illustrations. Describe 4 money laundering offenses, including those which could be committed by an accountant. So accountants, you see again, you may also be a threat. In case you choose to collude with the thugs, because you see, we are relying on you to help us combat illegal activities in the society. We are relying on you. We say the accountants play a critical role in combating illegal activities like money laundering. But the reason why people or companies launder is because they engage in illegal activities like terrorism, so they may want to hide from such activities by laundering the proceeds of crime. So as accountants, you have a critical role in helping to combat money laundering activities. The question required candidates to identify money laundering offenses, including those which could be committed by accountants. This is the question, money laundering offenses, including those which could be committed by accountants. Now, one way to identify easily these offenses is if you understand the process of money laundering, it becomes very easy to identify some of the offenses or crimes including those which could be committed by accountants. So in money laundering candidates, the initial stage is known as placing. Placing is the initial stage in money laundering, where illegal or illicit funds are introduced into the financial system. And at that very stage, the accountant may be involved by creating false invoices or manipulating financial records to justify the deposit of illegal cash into a bank account. So that is the first offense at the placing stage in money laundering. The question says, using illustrations. Can we have the question again? Can we have the question? Using illustrations, describe 4 money laundering offenses, including those which could be committed by an accountant. So at the placing stage, an accountant might be involved by creating false invoices. Creating false invoices or manipulating records. Creating false invoices, manipulating financial records. Manipulating financial records, that is an offense. And I've explained candidates that at the placing phase, at the initial stage in the money laundering process, funds are introduced into the financial system. This is where funds are introduced into the financial system. Placing. For example, an accountant may help a drug dealer. Let me illustrate. You've been asked to illustrate. This is the illustration. The accountant may help a drug dealer to open an account. May help a drug dealer deposit cash earned from illicit activities into a business account, which is is disguised as legitimate revenue. An accountant helping a drug dealer to do what? To deposit cash earned from illegal activities into a business account, disguising it as legitimate revenue. That is the first offense, and you've seen how the accountant may facilitate this crime. Now, the other phase or stage is the layering. Layering stage. Now, this involves creating complex layers of financial transactions. Layering, we get the word layering from layers. Creating complex layers of financial transactions. It involves creating layers of financial transactions. Creating layers of complex financial transactions. And the purpose is to obscure, to hide, to disguise, to hide or to obscure the audit trail. To obscure the audit trail. First of all, money is introduced into the system. Then after the money is introduced into the system, then the process of layering begins, where there are multiple layers of complex financial transactions. The purpose for initiating these layers of complex financial transactions is to obscure the audit trail, and also to disguise the original source of the funds. To disguise the original source of the fund. Because remember, originally here, the accountant may have helped the drug dealer to deposit money in a business account using false invoices. But that is done, then layering, then there is that process of having many transactions. You understand? And here, candidates, accountants can be also complicit by setting up shell companies. So here is the role of the accountant. The accountant may help the drug dealer to setting up shell companies. These are companies that do not exist in reality. They just have names. But the companies have no addresses. Okay? Then after setting up the shell companies, then there is that transfer of funds. Okay? Through multiple accounts. Transfer of funds through multiple accounts. So you set up 29 companies. Does 29 ring a bell? You set up 29 companies or 50 shell companies. Then you have multiple transfer of funds. And these 50 companies, these 50 companies, you may have 500 accounts, like is the case in Kenya's county governments candidates. The controller of budget did reveal to us that there are county governments with more than, there is one that had 384 different bank accounts. And there was one that had just 3 bank accounts. Yet they are receiving almost the same amount of money, less than 10 billion. So one county has 3 bank accounts, another one has 384 bank accounts, different banks. I do not know the motive, but we are discussing money laundering, where the accountant may help the drug dealer to set up shell companies, and these companies may be set up in multiple jurisdictions. There is one in Africa, another one in Asia, there is another one in another continent, another one in I don't know where. So after the money is initially introduced into the financial system, then layering begins, and this layering means creating, setting up shell companies, then transferring funds into multiple accounts. The objective here is to obscure the audit trail and to ensure that it's not possible to know the origin of the money that is in the system. So money is wired to different banks many times, different jurisdictions. So it becomes a very complex web movement of money. Do you understand? So the accountants could also be involved in these offenses. And we are giving an example of the role of the accountant at the layering stage. The accountant can help those who are laundering money to set up shell companies. The accountants also can help in the transfer of funds through multiple accounts. Okay? So setting up shell companies in various jurisdictions to make it difficult to trace the origin of the money. This is the second phase, layering. The third phase is known as integration. Integration. From the word integrate. And currently this is the final stage. And in this final stage, the laundered money is reintroduced into the legitimate economy, often through investments in real estate, investments in stocks, businesses, luxury assets, and so on. The laundered money is reintroduced into the legitimate economy. Here, the laundered money is reintroduced into the legitimate economy. You see the procedure, candidates. Placing. Funds are introduced in the system for the first time. Then after that, that money keeps on moving from this account to that account for some time to discuss the origin. Then it goes at the point where the laundered money is now introduced into the legitimate economy. You have individuals buying all supermarkets in town here. We have individuals who are now buying houses, buying estate, luxury assets, and all that. All right. So this money is introduced because the one who sells land may not know, and it does not need to know the source of the funds for the one who is buying. So you have land here in town. You just sell it to individuals. Okay, they have your property, and you get the money. So that is the integration phase. Investments in real estate, investments in businesses, buying shares in companies, starting businesses, luxury assets, and so on. So what could be the role of the accountant at the integration? We are discussing money laundering offenses, including those which could be committed by the accountant. So what offense can the accountant commit at the integration phase? Here, candidates, an accountant can help a money launderer purchase property using funds derived from criminal activities, making it appear like a legitimate investment. All right, the accountant can help the launderer to purchase property. Another offense is failing to report suspicious activity. Failing to report suspicious activities. You recall in our previous subtopic, we outlined the responsibilities of the accountants in money laundering, and one of them is reporting suspicious activities. So accountants have a legal and an ethical obligation to report suspicious transactions or activities that may indicate money laundering, and therefore failure to do so is a serious offense and can result in criminal charges. For example, to illustrate candidates, an accountant notices, say, a client making large cash deposits with no apparent legitimate source of income. You know your client very well. The client has been depositing 3,000 shillings after every week. Every week the accountant has been depositing 3,000 shillings as maybe savings or even turnover. You are the accountant of a bank and you notice that this client has been depositing just 3,000, 5,000 shillings. Then all of a sudden, this client deposits millions of shillings in a month. That is a large cash deposit compared to the history of this client. So failing to report such suspicious activity is what we are saying can amount to serious offense. And that's one way in which an accountant could commit money laundering offense. Right? That is a failure to report suspicious activity. Failure to report suspicious activity. And you can see, candidates, this fourth point, I'm picking it from what we discussed earlier on the responsibilities of the accountants. The other 3 points I've developed them from the process of money laundering. You understand? Have you learned something, Felista? That is a past paper question. So when answering questions, be very careful. The question says illustrate. Using illustrations. So you have to illustrate. Don't just give the points and expect to have all the answers.